Hello traders, Steve Ganz here, and I want to share a new start to finish trade with you. So this one's going to be a little bit different. I think most of you know that I like the butterfly trade configuration for a host of reasons, and one of them is its flexibility. So I'm going to look specifically at a butterfly that is broken wing to the downside. Now, why the downside? Well, let's just take a look at the market here. So if we look at the chart of the SPX, I've made some notes on this. When we were up here at these all-time highs, I indicated that this is probably going to be a resistance area, and it was. I've also indicated that this area is likely to be a bit of a support area, and I put this on here just within the past week. And then we've got a minimal support area here as well, around 5,400. But I do expect this upper block to probably be upside resistance for the foreseeable future. And that resistance, in my opinion, starts actually around this 5,500 range to maybe 5,550. So if I'm going to build a trade that anticipates that area being resistance, a broken wing butterfly is a very viable trade for that. So here's 5,500 up to around the 5,550 range. So I'm looking at doing a 5-lot broken wing butterfly in SPX. I'm going out here to October 18th. I'm just using the weeklies. You could just as easily use the monthlies. I used to always use the monthlies because they tended to be more liquid. Anymore, one's just as liquid as the other. There's not a significant difference. The weeklies are getting plenty of trade activity on them. And let me just spread this out here a little bit. So this is what this trade looks like. Now, this is set up that it's going to benefit from further down movement. In fact, to the downside, there's not going to be any risk of loss in this current configuration to the downside. If the market starts to move up, and it starts to move up significantly going through my zone, which starts at around 5,500, then I will need to adjust this trade unless that happens late in the trade. In other words, if I get 30 days out in this trade and then we start moving to the upside, I'm not that concerned about it. But what I'm looking for here, you can see what happens over time when this trade decays as significant profit starts to creep into this trade, and that profit zone is quite wide. When we're 5 days from expiration here, I can come all the way up here almost to 5,600 and all the way down to, well, there is no downside. I mean, if the market moves down here, I'm guaranteed a roughly $800 profit in the trade, no matter how low the market goes. So really, this is a good environment for this trade if your opinion is to the neutral or bearish side. Neutral meaning that we're just going to kind of decay in this general range, which would be great for this trade. Or you're thinking we're going to get a pullback. Or you think we might get a reduction in volatility. If we get a reduction in volatility, that is also favorable for this specific trade. So let me go ahead and save this trade. And this is a call broken wing butterfly. Now, the reason I am using the calls too is because if the market continues higher, these are going to be pretty liquid in this range. If the market were to continue lower and these were puts, maybe it wouldn't be as liquid. More often than not, I tend to use puts. But if I'm going above the market like this, I will use the calls, because if the market does move up and I do need to adjust, if I'm closer to the money, I'm going to have a little bit tighter bid-ask spreads when I do need to make an adjustment. So I'm just going to put the date on here. It is 9/10/24 opened, and this is basically a 60/50 broken wing butterfly, and I just label them that way. And I should probably put downside here, and that it's a call, BWB, and I'm going to save this trade, and I will share a link in the description down below so that people can open up this trade themselves within OptionStrat. and just kind of play with it yourself. Model some different things as the market moves around. This is how we as traders learn, is when we've got a great tool like this OptionStrat where we can model all the what ifs. What if the market goes down? What if the market goes up? What if volatility drops? What if I move this leg to a different location? All of those different things are really cool things to be able to play the what ifs in this trade. Now, you'll see right here, this is showing a fairly significant loss. Don't worry about that. Generally speaking, when I come in and I make these trades, you know, the bid-ask spread is a little tighter. I think 50, that's just the slippage from entering the trade. So these things, when you are dealing with SPX or RUT, some of the bigger indexes, that P&L bounces all over based on the bid-ask spreads at any given time. When I enter a trade or when I adjust a trade, I always go out there and I put out a preset price. I never use a market order on these because I'll get caught in that wide bid-ask spread, and that will really be a detriment to my trade. So I always go out with a limit order that's priced at something that I am willing to enter or adjust at. If I were actually entering this trade live, I would have been a little more selective. I wouldn't have just hit the enter button. I would have put out a price that I was comfortable with, and then I would have sat there and waited an hour or two until I got that fill. But for the purposes of demonstration, I just took the market just as though I had entered with a market order, and therefore it will show me a little bit of slippage right out of the gate. So that's it on the launch of this call broken wing butterfly.